we both we have a blended family.
Okay, that's half the fun. Keep it going all the time. That's good. All right. So were you married before?
That's us. Yeah, we both were. I was married for like 16 years. She was married for like 14.
Okay, no problem.
But
And
then we finally found each other, made Christ the center of our marriage, and now we're trying to build together.
well, that's the ultimate goal. As I always said, God, family, money first. God is first, family is second. Money is not something I love, but I know how to get millions and billions, and I might as well take care of my family at the same time. And that's the ultimate goal for all of us. So you had kids for your first marriage?
Yes, so we are empty nesters now. My youngest is 22, and my daughter is 27, and I have 2 grandkids.
Okay.
I'm getting an echo.
Okay. Nick, is there a reason we got an echo? We can get rid of the echo. Okay. Are you watching the live also at the same time?
No, sir.
Okay, so no, okay. All right, so let's see if they can fix it on this end as well. So your beautiful queen already had kids before you as well, correct? Are they all grown?
Correct.
Okay.
Yeah, they're all grown. She's got a 30-year-old, a 26-year-old, and a 22-year-old.
Okay. All right, now let's go back to the LLC. You said we have an LLC. What year was the LLC set up?
2023.
Okay, 2023. Okay, where does it bank?
Chase.
Fantastic, love it. It's been at Chase for a long time?
We've had our personal accounts with Chase for a long time, and then that business one with Chase since it opened.
Perfect, okay. All right, because Chase is basically very good. To me, as you notice, you watch my webinars and stuff, I'm always saying Chase is one of my favorite banks because A, if we do it right, we get the personal cards, the business cards, and then they give us a line of credit. The line of credit is what we would use to actually finance a business and do some as well. What do you do currently for a living?
So I'm a general manager for a Lowe's distribution center.
Okay. Is that where you want to stay the rest of your life, or would you like to replace it?
I'd like to replace it as soon as possible.
Okay. Well, you're going to be 12 months or less. That's all it takes to do it right. Okay. What does your queen do for a living?
So the LLC, what she does, she works with a network of pharmacy. Her company is called Pharmalines.
Okay. Is that
it's out of California.
Okay. Now,
but we live in Texas now. We're both originally from Los Angeles, but now in Texas.
Okay. The bumper sticker says, "Don't mess with Texas." Okay. So this LLC is in California, right?
She actually set it up in Texas.
Okay. She set up in Texas. Okay. But you brought the fact to California. What does that mean? All right. Is it a corporation in Texas qualified in California or what?
I don't know, and that's part of the questions that we have if we did it correctly, because she conducts the business in California.
Okay, so California, the LLCs there. Because understand, a corporation filed at a state or an LLC. And remember, an LLC is not a corporation. It's a limited liability company fed off a sole proprietor. That's what it's actually done. It's set up since day one. So if you file it in a state, you're allowed to file it in another state as a foreign entity. So again, depends if you file it as foreign entity. In other words, in Texas, if you got the corporation LLC filed in Texas, did we qualify it in California? That's a question we have to look at, which means that corporate.
Yeah, I don't think we.
Okay, well, that LLC can qualify in all 50 states. So what happens is, remember, Texas doesn't have certain taxes that California does. Is there a reason we're doing it out of California? We're actually living in Texas and we're doing a Texas Corp. What's so busy about California? Why are we doing it there?
because of the nature of the business. So the way it works is that when somebody gets into a car accident, all the expenses go into a lien.
Right.
And so she works with the network of pharmacies that pay for medication on a lien basis.
Okay.
And so then she makes her money once the case settles, and then she pays the pharmacy and she keeps a percentage as well.
Okay. So question, the LLC in Texas doing business in California, no problem. Okay. Now, has that LLC thought about being an S corporation at all?
I don't even know how to do that or what that means or how that would look.
Okay. Here's what happens with all this thing. And unfortunately, the world, don't feel bad, because everyone I talk to, they're so lost, it's crazy, because they've got LLCs and all these pieces because they listen to silly people who don't know how to be a real coach. I'm sorry, it's just what happens. The LLC receives money under a tax ID through the corporation through Chase. Okay? You and that corporation, LLC, can become an S Corp. What does that do? What happens is your paycheck right now, you get right now, is a W-2. So you're a W-2 employee. They basically take your paycheck, they tax it, you get the leftover. Okay, that's what happens right now. The LLC has a problem called a 15.3% unemployment tax, because that's what they have on a corporation, because an LLC has a unemployment tax because it's basically going to be fed off of federal. So the federal unemployment tax is going to be like 15.3%. If the LLC and you and your beautiful queen decide to make it an S corporation, that allows you and your queen to take one paycheck. It's called reasonable compensation. So in other words, right now you're getting a W-2. She's got this LLC. She's probably pulling draws. All right, it's probably being taxed more than it should be. And if it was an S corporation, you can absorb all the taxation in the S corp. And what happens is you get a reasonable paycheck. That means very simple, down the line, an LLC turned to S Corp doesn't pay a lot of tax, all right, until they get to about $3 to $5 million. Okay?
Okay.
So the goal is to understand that we're going to go through that many, many times. We're going to make sure you're not lost and you're connected to me and other people that can help guide everything you're trying to do. Very crucial to all of us. Okay? So again, we have LLC, bank is Chase. Okay? Looking at your personal credit. They gave you one of these. Okay, you have this in front of you or not?
Yeah.
Okay, so this is what's called an analyzation sheet. We like to onboard somebody, what's called Analytical 750. They tend to help and look at the scores and what we're looking at. So this score here is very simple. Lawrence is your specialist, okay, as you know.
I think if you're sharing something, I don't see what you're sharing if your video's on.
Well, what happens is this is very simple here, okay? And what's going to happen is I'm just writing notes to myself. What's happening today with you and the corporation, all the things we're talking about with your queen, this is going through a program called Phantom. Phantom's recording what we're talking about. It's a note taker. Okay. It's going to tell you exactly what we're going to do for past, present, and future. And it's going to tell you your next steps. And that's the most important thing for us to make sure we're all on the same page. It's like when I mentioned Lawrence is your specialist. After this meeting today, we'll be sitting down with Lawrence and Valerie. Valerie's one of our point people. We make sure our team holds your hand 100%. When we look at this, the scores are 700, but here we have some problems. We have a Capital One, and we have a Chase at 100% utilization, okay? We have a Citi card at 89%. So we go down this list here, the problem is going to hurt your score is utilization process. Okay?
Yeah.
All right. Now, does anybody in your family, military or yourself?
Yeah, my wife's son.
Okay. All right. Do you have a Navy federal account yet?
No.
Okay. We're going to send you a link to what's called Navy Federal Credit Union. Okay? Your beautiful queen is going to basically call Navy. She's going to basically say, my son is whatever military it is. She doesn't need him on the phone or anything. She's going to open an account. That Navy account They're going to ask her for $15, so have it ready on a debit card. They're going to overnight her a debit card on a brand new Navy account. Okay? The reason we want Navy, no matter how bad credit is, good or bad, Navy will give us credit cards up to $80,000. And then from there, they'll give us up to $50,000 on a loan. Okay? And we're looking at to grab money. That money can be for a couple things. It could be to reduce debt to ratio. Okay? Or it could be basically because we want to get into an auto income process business. So what happens is because her relative, blood relative to her, is that she's going to get the Navy. Okay? All right. From there, she's going to get an access code. The access code is going to be given to you next. The access code from there is given to you. You're going to repeat exactly what she did. You're each going to have a separate Navy account. Okay? I'm going to line up histories for you. All right? Credit bureaus and everything else. We're going to talk about divisions and everything else. We're going to create up to $1 million of credit in the next 6 months to a year. Okay? We're going to grab businesses. We're going to own businesses and auto incomes so you can actually enhance your paycheck or replace it. So Navy is a key point. Because right now, if I don't have a military, I'm going to think about getting you what's called SoFi. SoFi will do debt consolidation. They'll reduce your debt to ratio. All these cards have to be at a 29% debt to ratio. Very crucial. So as we do this, let's understand. 29%. Well, we're back in time in 1977. I was a consultant for TRW. I created the 29% rule. 29% means everything's at green level. Okay, that means green. Anything at 30 is going to be basically yellow. 50 is going to be red. Okay, so our goal is to make sure we're not jacked up on credit. All these things here with the Navy, we give us position to get a card or a line of credit to reduce your debt to ratio. It says anything else, it's like anything on a card. Every credit card we have, before we actually go past 29%, we'd always want to increase the limit in the future. The next thing is, we look at this here, let's look at if I can find any American Express cards, and I don't see any. So you have any Amex cards, personal or business?
No.
Okay. Have you ever had them?
No.
Okay, so that means we've never had a problem with them. Great. Okay, we look at the list. You have a Chase card. Means you have no problem with Chase, correct?
Correct.
Okay, is this the same thing for your Queen?
Correct.
Okay, see what happens on that LLC, we have to look at one thing. This gives me the ability to have two CFOs. You are a CFO for your personal life right now. Both of you are. You're both CFOs, okay, for personal life. That's fine. As you said, kids and grandkids. For the LLC, you want to be a CFO, but you don't want to be joint CFO. So we can position different things as we look at things. Your beautiful Queen does things of medical and pharmacies, okay? All right, which to me, do you have a nonprofit organization yet or not?
No.
Okay. If she does what she does right now through nonprofit, she's entitled to grant money. She could actually deliver, or I don't know if she delivers medication or just does the paperwork for it yet. We'll get into that. But again, the government will give grant money, all right, to a nonprofit to the type of the business she's in now. She's helping people in accidents or whatever for medication. If she did the same thing for medication for elderly care, hospice, or military, she would enhance that business, and I would say we want to be a nonprofit. Nonprofit's going to give us about $112,000 of grant money. All right, that's per month, by the way. So they give up to $100,000 of grant money per month under a nonprofit. Okay, so that's something to think about as well as we build this up. We have to reduce the debt to ratio. Is your Queen's credit file jacked up like yours?
No. No, hers is better.
Okay, so the goal would be, have we onboarded her yet?
Have I done what?
Have we looked at her credit files?
I don't think so.
Okay, so we would want to look at her credit as well to build credit. Once she has the Navy set up, and you have your Navy set up as well, we'll look at debt to ratio based on her files, based on your files. Our goal for the corporation LLC is to build credit to that file. If we look at your file and look at the list of your cards, and we build your score and bring your score up, get rid of the 29% down to that, will help us get the credit to the LLC. If she has good credit now and not too much stacked up, we could get credit to the LLC now. We have to create money to put something in an escrow. Our goal is to use borrow money to get something in an escrow no matter what. A line of credit. If we take Chase Bank today and we go after the Sapphire or Freedom card, and you have a Chase already, correct? So what is that card you have for $10,000? Is that Freedom or Sapphire?
Let me check. You said the Chase card?
Yeah, the Chase card you have for $10,100 would have to be Sapphire or Freedom.
It's actually, it says Prime. It's a Prime Amazon card.
Okay, so it's a combo card. Okay,
Yeah.
so it's Amazon / Chase Bank. Okay, so what we would position is, understand, here's how the bank looks at it. Here's how all banks, all four: Chase, Wells Fargo, U.S. Bank, and B of A. Chase Bank, if you want a line of credit there for $150,000, they will not give it to you unless you have a personal account and also a business account. So this means they use their credit cards as their what's called affiliates. So if we have our Chase account for LLC and we get a Freedom card or Sapphire, we get an Inc card. They have 6 Inc cards. This is a corporate card. Keep in mind, in the back of your mind, all corporate credit doesn't show up on credit file, a personal. There's only one card that does. It's called Spark. The Spark gold, green, or blue shows up on both files. All other cards don't show up at all. Okay? So as we build corporate credit, it won't bring your score down no matter what you do. So understand, so if we go for a Freedom, Sapphire personal, we go for a Inc card, we have these cards, within 4 months later, we will have a line of credit from 50 to 150. Okay? That is called checkbook money. So that line of credit is a checkbook and a debit card. Until we write a check, we don't have to pay anything. That would be the money you would target 4 months from now into an escrow. Okay? I line up escrows up to the billions of dollars all the time. So what happens is now that escrow is going to be part of, say, you know, as you notice, you watch my webinars and stuff, you'll see a laundromat, a car wash, an apartment complex, a Wendy's restaurant, a Jack in the Box, something like this. My favorite one is storage units because they're dummy proof. Okay, I mean, I do something new, I feel kind of silly and dumb. Dummy proof means if I own a storage unit and it's a division of a corporation, it's an income. So that income, usually the first one's about $5,000 to about $10,000. Lowest one's about $3,000. And what happens is you own a piece of something. It's a deed of trust. That means you own a piece of something as a division tied into the parent company from Chase, and you would see basically income on a monthly base from $3,000, $5,000, or $10,000. When you own something, you own the asset. It's just going to go up in value, and that's what we wanted to do in the first place. So once we get your credit score down to the literally 29% rule, your score is going to jump up to about 801. So 29% would give us up to an 801 if it's done correctly. We'd get it down to 10%. So we have an 800 score now. That score will stay the same forever as long as you don't jack up a card. I'm always going to convince somebody we want the Amex, okay, gold and platinum, personal and business. Now, the personal cards of Amex, gold and platinum do not fluctuate. In other words, when we look at a normal credit card, for instance, what happens is it fluctuates, which means it's going to have a utilization problem. So we have to understand rules and tools. When I'm going over, I'm going to go over with you 1,000,000 times, and the next year you're going to hear it a zillion times. It'll become habit forming. It's like this card of mine. If I use past 29%, it drops my score. It fluctuates. This is a $10,000 card. So I put my stick in the back. I know on this card I can't use more than $2,100 on it. It might say 10, but I never use more than 2,100. This is my $50,000 venture. Again, very simple. As long as I keep it at 29, my score never goes what? Down. Stays where it is or up. I maintain about an 847, so does my wife. And we have the identical credit cards. The only difference is we don't have joint credit. Gold and platinum cards do not fluctuate, which means if I had an emergency, I'd use these cards. lost a job, use these cards. My score would never drop. So it's, what I always called rules and tools. So understand, Amex, Gold, and Platinum Personal, all right, we'd want those for safety because we'd have up to 100,000 of personal credit as a safety factor. We don't want to jack up things. If we had that before these cards were jacked up, they probably wouldn't be jacked up. Again, they are. So we have to figure a way how to reduce them. Well, that's a Navy. That's a SoFi. No problem. We get you down to that 29 to the 10%. Your score goes up to 800. We get gold and platinum cards usually. And what happens is very simple. Now, credit cards tend to give us a credit line. Like I explained to you about, the Freedom or the Sapphire, and the Ink card from Chase will give us up to a line of credit up to 150. A blueprint loan, American Express gives all the time. So it's very simple. What happens? If I get a gold or a platinum card, American Express, they don't fluctuate for me personally. So that's personal. We got to realize that. For the LLC, I want the gold and platinum as well. What happens is the platinum card for the American Express, for the LLC, they will give you what's called a blueprint loan up to $250,000. You can apply it in American Express the moment you get a 660 score, literally, and you have 1 year in business. But again, we can apply for those cards with no inquiry. The loan needs a 660. You already have that anyway. You have 700. So as we position, another way to grab money, we got to figure out 3 ways to grab money for escrow. Number one, to grab money is we're looking at Chase Bank. That's Chase. Number 2, we're going to look at Navy. Number 3, we're going to look at basically here, all right, the American Express blueprint loan. So 3 sources. This will give us anywhere from $150,000 to $250,000 of credit. Again, it's checkbook money, debit card. You don't pay a bill till you write a check. You'd want to use that into an escrow. If I line up an escrow, you want to go into an escrow, and let's say we wrote a check for $25,000 off the line of credit. Well, escrows are about 60 days. No problem. So 60 days from now, you're going to have about $3,000 a month income for the rest of your life under the LLC. Okay? During this time, what's going to happen is the management company verifies how you paid. They pay the payment on this, all right, because they never pay you anything called proceeds until they make the payment because you use borrow money. They don't jeopardize themselves or anyone else because borrow money is not taxable, but you get an asset, you get an item, now you have $3,000 a month. The LLC, if it added divisions, we would want 9 divisions across the board. Each one of these divisions will have the ability to what's called daisy chain credit. Each division will have its own credit file. Each division will be able to buy an asset. Okay? So if we look at the assets we're trying to obtain, pretty important to us. So I'll assign each division. Division buys, like I bought my first Jack in the Box when I was 19. We bought a Carl's Jr., maybe a Wendy's restaurant. Maybe want to buy a storage unit, an apartment complex. These are the things, as the investor you're going to become, have the way to get up to the $100,000 a month. Usually that's, I'd say 18 months to 12 months is an average if someone does what they're told. They do what they're told, they get it done in 12 months or less. You're creating a line of defense as well. What happens is we have the ability to do one thing. One thing we look at is it becomes a management company. The management company managing these pieces, which is pretty important to do. Because our goal is something goes wrong. Right now, unfortunately, you and your queen are what I call the ducks and sheep. But if something goes wrong, it's on your back, and it sucks. If we had a bad location, we go to the bad locations. I model this after banks and cities and grocery stores, because that's what they do. Last year, your banks bankrupt 22,000 locations in front of the whole world. Okay? And unfortunately, most people didn't pay attention to that. So the good thing about me, God gave me the full blueprint. Okay? I don't get stuck. All right? I memorize everything. Simple to do. And I studied a lot in accounting since I could walk practically. And I keep up with it every day. So once this is basically CFO level, personal and business, we get to change our lives. The ultimate goal. And that's what the goal should be. Now, questions, and we've already asked some of them. We're going to go back again. Has there ever been a tax problem with you or your queen?
We have back taxes that we have to pay, but we have a payment plan right
So this is federal back taxes. Okay.
now.
Were they from California?
No, they're here in Texas.
Okay. All right, because it's good because in Texas it's better. California, you have federal problems. They rat you out and tell you the state, then they give you a state problem. Okay. So keep those in the offer and compromise or the payment arrangement you're doing right now. Pretty important. What we don't want to do is have an escrow attacked. Okay. As long as we have it in a payment arrangement. If we did not, I'd say let's do an offer and compromise. Let's get a payment arrangement. The IRS is Monty Hall. They'll negotiate everything. All right, because they don't care. They just want the money. At the end of the day.
Right.
No problem. All right, we talked about family a little bit. Okay, no tax problem. We had a past one. There was no bankruptcy, right? Okay, for either one of you.
Bankruptcy like over 10 years ago.
Okay, was it a 7 or a 13?
I think it was a 7.
Okay, well, a 7 would be a straight 7. They just wiped out the debts. The 13 is when you make a payment plan.
No, it was a 7.
Okay, good. All right, so the next thing that will happen is usually after 1 or 2 years, the bankruptcy is no big deal. But it could come up going to an escrow because they do a title search, okay? If they ever did, we would just seal it and get rid of it anyway. So no problem. Now, that was you. Is that your queen as well? Or she had no bankruptcy on
Yeah,
you?
both of us went through one when we went through our divorces.
Okay, no problem. All right, now, in the future, there's a problem. If you get sued, they will sue her. If she gets sued, they'll sue you, okay? If you think about having a marriage agreement, they can't do that. So keep that in mind. I talk about this all the time in the classes and stuff. A marriage agreement, right, between husband and wife separates liability. Okay, all it is an agreement. They'll call it a postnup. Some women or men go, they get freaked out about it. In a marriage agreement, if you put only one thing in it called a cheat clause, you're fine. My prenup and postnup say if I cheat, she gets it all. If she cheats, I get it all. Okay? My first wife cheated. All right? She got nothing. Difference is I still gave her $15,000 a week for 2 years because I didn't want anybody to hear I didn't give her anything. So $15,000 a week for 2 years is pretty good. Paid all her bills on top of that. Okay? I didn't want to hear it because I have 4 beautiful daughters with her. All right? And I didn't want to hear that daddy didn't take care of the ex-wife, who should have been taken outside and stoned to death anyway. Well, that's what the Bible told me to do. The Bible is the law of God. Okay, come on, that's what it said. You're not allowed to do that, so I couldn't do that anyway. So anyway, I gave her money. All right, no problem. All right, raised my 4 daughters, took, all that good stuff. But again, since there was an agreement, she was entitled to nothing. She cheated. My current beautiful wife for 21 years, my queen, we have the same thing. When I came out of coma, very simple, I'm going after my stuff back. Had 3.7 billion stolen, structure, okay? I get audited, no problem. David Kenner owns Death Row Records. He stands up with the tax person and argues with them, says, Mr. Reynolds has a prenup and a postnup. Because they wanted to give my wife a bill for the audit fee, plus me, okay? And the auditor didn't like the fact that I had a prenup and postnup. I don't really care. They couldn't give my beautiful queen a tax bill. I will always separate liability. I will always plan the problem because I don't want things coming home. I believe you never bring the pain home ever. That's not acceptable. Now, the LLC that you have currently right now is in Texas doing business in California. We're going to check to see if it's qualified or not. And in the future, that LLC should be an S corporation because it allows you to decide what your paycheck is. Under an S corporation, it says reasonable compensation. Reasonable compensation means if you total all your bills up and you pay 20% on top of that, that's breaking even. The goal is to be able to get company cars and different things and business trips, what she does as well. She travels to California to Texas, is that correct?
Correct.
Okay. All that's just a business expense. That's what it should be as well. All right. Does she have a piece of property or a place she lives in California?
She a room with a friend.
Room with
when she goes.
Okay. In the future, if the LLC gets to the point it makes too much money, she'll probably have a condo that the LLC owns under a division that she gets to stay at as an employee. Okay? That way she's spoiled rotten. Okay? All right?
Let's do that.
So again, that's in the future. We do things as well. Everything that LLC does can be a write-off if it's done correctly and justification under the tax code as well. Very important things to do. Now, the standard on an LLC or any company is about 18 divisions. That's 9 divisions for lines of credit. That's 9 locations. If we have the 18 divisions within a year's time, that's where you've actually had each division have credit file, have credit, finance a piece, have an income. Okay? Every division has a separate income. And that's what the goal should be. Because something could go right or wrong at the same time. We want to protect ourselves. And that's our ultimate goal. Now, as we do this, do you guys own a house in Texas?
Yes.
Okay. Did you homestead it?
Yes.
Okay. Is it in a trust?
No.
Okay. Think about irrevocable trust. When you bought the house, is both of your names on the loan?
Yes.
Okay. Well, I'm going to say no, because if we lost that house for whatever reason, that house and that lender would actually report it to the IRS as a 1099-C. Okay. Now, the house you live in today, is it your dream house or the house for now?
It is a beautiful home, but I know my wife would like something different.
Okay. Well, hypothetically, a year from now, I get you to a point of $100,000 a month income. You have a paycheck, offsets the taxes, and she can buy any damn thing she wants. Will she do it?
Absolutely.
And then she'll decorate it too. And just remember, you are a guest in your own home. Okay? As long as you understand that, you'll be okay.
100% aligned.
Okay, we got it fine. No problem. So again, the house you're in right now could be converted as a hospice, okay? Or it could be leased out or maintained, or it could be sold, and you do a 1031 exchange and other things as well. It's up to you. Again, I don't like selling anything. I like keeping everything, okay? And that's what I like to do. If I position something like the house I'm in, and I turn it into hospice care or donate to a nonprofit, I offset taxes, which gives me the ability to turn it into something. It's like one of our guest house, we're in the process of turning it into traveling nurses. Traveling nurses right now gives us about $4,800 a month, okay? For a piece or a house or guest house at city, they're doing nothing. Might as well turn it into an income, right? Might as well do that too. You have traveling nurses, you have traveling doctors everywhere, and they always need a nice place that's safe, and that's what they look for. There's agencies that put those up together as well. So again, in the future, it might be something you want to think about as well as we position all these pieces. Because it's very important that that LLC gets 18 divisions like yesterday, all right, added to the Chase Bank account, all right, ages the divisions, and then think about the nonprofit. If a nonprofit was put together, all right, I would tell you to get one from last year or the year before, okay? Nonprofit is basically filed at state level and be qualified in any state you want to. Or nonprofit has what's called a 1023 form. This gets us a 501c3 exemption. The IRS does some good things for us once in a while. If we took a nonprofit corp last year, set it up, and you basically open a bank account, they would actually take that federal exemption and they would backdate it to the year of last year. So now, since the intent was nonprofit, now you have an exemption that's on its second year. The exemption on its second year entitles you to grant money, okay? Because it's not new, it's last year organization. Grant money can be about $112,000 a month, plus based on transaction. Nonprofit also can have its own division as well. I might have a division for hospice care, elderly, transportation. All these pieces allow us to create an income. Again, in the future, you might think about getting a paycheck from a nonprofit, because I don't think you really care where it comes from, as long as it gives you the American dream, okay? Rich and famous people always do nonprofit corporations to offset taxes, and that's the ultimate goal for all of us, to understand how to play the game. Me, business is
Got
a
it.
game. I want to win the game. That's what the goal is. You guys have cars right now,
Yes.
okay? Are they paid for or not paid for?
Not paid for.
Okay. In the future, the cars should be registered to a division of a corporation. In Texas, a lot of times they make you register the car where you live, okay, like they do in Florida. But again, if it's a company car, they can't dictate that. In the future, we're going to help you buy cars at fleet price, tax ID, and a division. That way you can park it anywhere you want to. The problem we have today is people want to sue everybody. If you bump a car, they're going to sue everybody. That sues you and your spouse, and the rabbit hole is like the depositions. It's just a total nightmare. Unfortunately, this world has become let's sue everybody attitude, which is a bad thing. Okay?
Yeah.
Now, the primary thing with me and you, we're going to get auto income. Is that correct?
Correct.
Okay. How aggressive do you guys want to be?
Extremely.
Okay. That means 18 divisions. We build credit. We reduce credit right away. Within 4 months, we get checkbook money. Within the 5th month, you're in escrow. And then you can basically look at different escrows going through the process. That's Navy. That's Chase. That again, that's American Express, up to $250,000. You're trading money in that Chase bank account. You have the transactions. Okay, all you got to do is line it up. Let me line it up for the Amex card to get you a blueprint loan. Now you write a check to escrow. That's the ultimate goal. Writing a check to escrow and getting what's called auto income. Owning things you drive by every day. Okay, that gets an income, and that's what the goal should be. So again, all right. So I've done all the talking. What are the questions you have of me?
So I have some of those cards that I'm looking at bringing the debt to income ratio down, and in a couple of them say like I'm pre-approved to increase the limit, but I didn't want to do that if I'm going to mess with anything that we were currently working on.
Well, what'll happen is you get these invitations to increase limits. Those limits should have been increased before we went to 100%. Capital One, just as a test, go online to Capital One today. Okay, log into your account. This will be written down in the Phantom program. Log in, act like you're going to make a payment. It opens the window. Right-hand side, it says I want. Click I want. All right, it'll open another page. Left-hand side, second to the bottom, increase your limits. Capital One inquiries do not have inquiries on the dashboard. If you ask for them to increase that limit, okay, you change your projections, they'll say yes or no. That should have been asked when you're at about a 40%, 45%. At 100%, the answer is probably going to be no. I'd rather take a Navy or a SoFi or something to reduce my debt to ratio on the card. So I don't want to jack up a bunch of inquiries. Now, the system's going to record this, and I want you to hear what I say. Chase has a 524 rule. And you bank with Chase for years, and that's what we want to keep in mind. Chase has 524. Later on, you're going to look at 520. You're going to look online, 524. It's going to show you exactly what it means. Every credit card has a personality, is what you have to understand. So every time we have a credit card or personality, that's what we have. It's like anything else. When we position something, I have to grab money to put you in an escrow. Navy, Chase, or American Express. That's the goal. Because that gives us money to put into an escrow. That's borrow money, not taxable, and we close escrow. Now you have an income, and then income's $3,000 to $5,000 forever. And we add more pieces again. That's what we do. So that would be the ultimate goal. So again, your specialist being Lawrence. When we're done here, we're going to talk with Lawrence and Valerie, go over your case file, and that way she's on the same page. If anything need to be done, she'll be the one expediting anything around the sides of what's being done. Lawrence will be reaching out to you as well and make sure we're on the same page. So what questions do you have of me of that now?
No, so basically what I'm working on right now is just reducing my debt to income ratio, paying a little bit extra for debt, and then working on the stuff that you and I just talked about.
Okay. Well, two things to reduce debt to ratio would be get the Navy account with your wife first, get yours next. From there, the other thing is SoFi would hand you a loan to reduce your cards anyway. Okay? SoFi does that to people all the time. You got good scores, you got good things. So if we have to, SoFi can do that as well. It's not going to hurt you at all. So again, different ways to reduce the debt to ratio right away. Okay.
Okay.
Because if you're making extra payments, again, that's going to take forever. So far it takes, and you list up what you want to reduce. You list it on their thing. They approve you. You're done. They'll do that within a couple of days. Okay. Let's get the Navy first set up as well. Okay.
Good.
We also
Okay.
we need to look at your Queen's credit file because that's double CFOs. And then think about the nonprofit as well, what she could be doing, creating grant money as well too. Any other questions?
Got it. No, just excited to get started.
All right. So tell your Queen I said hi. Okay. We're going to reach out to you there. Have a great and a blessed day. All right. She's hiding in the corner somewhere.
She is. She's camera shy because we've been working on the house all day.
Well, she's your beautiful queen. Your goal is to take care of her as much as you can. And that's the ultimate goal.
Appreciate it.
That's why we have our queens.
Thank you so much.
All right. You have a blessed day. We'll talk soon. Okay.
Okay. Take care.
All right. Bye-bye. All right. So you hear a blueprint. Okay. Blueprint of what we do. The main thing is looking at past, present, and future. He wants to be aggressive. He wants to get some goodies, and that's great as we get all these pieces. Understand something. The ultimate goal is how do we position something? The ultimate goal is from there, what do? We get to the point we actually take a blueprint loan. In other words, for instance, if I went after American Express, okay? All right, Nick, there's a way we can show this on the screen real quick. Let's say you let me line you up, okay? And I lined you up to basically what we just talked about right now. This is Amex. There's no inquiry to the platinum card. No inquiry at all. So this means if I went after a platinum card, what would I want to do? I can't qualify. Excuse me. The platinum card for the divisions corporation, there's no inquiry. Next, if I looked at this correctly, if I wanted to get a card, a loan, if I just did this personal or business-wise, all they need is a 660 score, 3,000 average in the bank, and a year corporation. That's it. They've had one for 3 years. What would they do for us? Simple. It'd get us a loan up to $250,000. $250,000 is a loan called Blueprint. Then we want to buy something. Well, we buy simple. We would buy, all right, maybe spending $50,000 of that money in an escrow. Maybe we're going to buy a storage unit or fourplex. I line up escrows all the time, so you write check to escrow, you pay the bill, you get the leftover. Now you have an income, $5,600 a month. So as we do all these silly things to help people, think about a blueprint call for you. Think about joining our Patreon program, $15 a month. It's in the link tree. All you have to do is follow me, and all you have to do is DM me and call the office right away and talk to a good specialist, okay? They're going to hold your hand and make sure you understand how to play the game. To me, it's been a game since I was a kid. So again, you have 800-254-9506. You can message me as well, talk to a specialist, be assigned to one as well, okay? This is Ray Reynolds, the Godfather Credit, saying, hey, let's get to that millions of billions because I did it, you can do it too. Remember, we do our best. God does the rest. Amen to that too. Never forget at the end of the day, God loves us all.